So basically there's like 3 levels of regulation that the CME is under. It's much more than what FX can say, or even cryptocurrencies, since cryptos are really unregulated.
So I would suppose I can categorize most of the retail investment products into either exchange traded products or over-the-counter product we call the OTC products.
Right.
One of the major advantage of a exchange traded products like a futures contract traded in a place like, for example, the Chicago Motor Exchange is, of course, the regulation that you mentioned, because the counterparty risk is basically being addressed. Okay, one of the biggest problem with OTC product is that whenever a broker fail, most of the time it's not necessarily their fault. Sometimes it's their counterparty that fails. Okay, so that is the biggest big difference in terms of risk as far as retail investors need to be aware of. OTC products definitely have a counterparty risk which up to date has not been addressed, and from time to time there will be instances where brokers do fail, and not necessarily from their own fault, because the counterparty failed. And that can also happen in a regulated exchange like FX trading. Okay, let's say, for example, one of the major liquidity provider, let's say Deutsche Bank, fails. It's going to have a knock-on effect on the rest of the other FX players, because regardless of which broker you open an account with, if your liquidity provider gets into trouble, definitely you are also not spared. Okay, so that is the problem with OTC product. So the one thing that is really stands out for exchange traded product like a futures contract is that the counterparty risk is basically being addressed by the clearinghouse, because they act as a buyer to the seller, a seller to the buyer. So yeah, that is always the good thing that we always think of. But there are also instances whereby even a futures traded contracts, counterparty risk do blow up. We saw that in 2008 where Baston's went belly up, for example. Right. I used to work in a brokerage called Man Financial, which was later become Man Global, something like that. Okay, and then they went under because the counterparty failed them. Okay, so yeah, there are times whereby this thing do happen. The good thing about futures contract is because the exchange is behind every trade. You will get your money back, but over time, because maybe you'll get maybe a 30 cents back to the dollar, but you still get your money back over maybe a longer period. Okay, right. Whereas in OTC market, if something like this happens, it's poof, all gone.